Earnings season is upon us, and we're going to find out a lot about what's going on in the U.S. economy during this earnings season. Yes, earnings are expected to decline this quarter, but it's really going to come down to what the companies themselves are seeing out there and if any of them warn or lower guidance going into the future quarters. So I put together a collection of 5 stocks you should be watching this week to give an indication of what's going on out there in the economy, because they're in a bunch of different areas and they're some of the tops in their competitive space. So let's see what they are. First one out the gate is Netflix. Now, I included this one because it's now gotten a lot more competitive for them in the digital media, video, entertainment area. But you can see they have a real good track record of beating just those 2 misses back then in 2017. But the shares have come way down because of these fears of Disney and all these other competitors rolling out their own streaming plans. So this will be an interesting one to see what is the consumer doing here. Are they going to subscribe to all of these different plans, or are they going to choose one versus the other, or be in one for a short period of time, then get out, or what's going to happen in this area? So this one, Netflix, trading a little cheaper now that it's had this pullback, but it's still trading at 87 times. So keep that in mind when you're tuning in to this conference call. And then we're going to switch over to United Rentals. URI is the ticker here. You might not have heard of them, but you've definitely seen their equipment around various towns, basically. United Rentals is the largest equipment leasing company in the United States. They have some business in Canada as well, and they're in a whole bunch of different industries, including energy, but that's just a small percentage of their business, but also in both residential but really non-residential construction. So this is an area where it's very cyclical, and they're going to see it when there is a slowdown. But you can see these shares are just kind of treading water here because no one seems to know, despite having 3 earnings reports already in 2019, what the outlook is. So nobody's willing to dive in here. Shares are still cheap, trading at 6 times, but you don't get a dividend for your patience. But this is one, if you want to know what's going on with the economy, it's a huge bellwether. Then we're switching over to Honeywell. This is one of the charts of the week, I would say. I mean, look at that. It's just a thing of beauty. Only that one miss back in 2016. And if you ended up buying on the big sell-off, that kind of panic sell-off in December of 2018, you've done quite well here in 2019 as the shares have busted out to another 5-year highs. But can it maintain this pace? Not a lot of the stocks that have been really bullish are maintaining it, but Honeywell is still one of the few. So this is definitely one to tune in on. Then we're going to switch over to the transports. We're going to get 3 of the railroads this week: CSX, Union Pacific, which is the chart here, and Kansas City Southern. I chose Union Pacific because I like those distribution points they have along the U.S.-Mexican border, and I like that they have the ports on the West Coast. But you can see this is also a very nice chart. They have only missed 4 times in the last 5 years, so they're pretty consistent here, and they put a nice string together. And these shares, too, hit a new 5-year high here in 2019. But on some of the recession fears, they've started to weaken a bit here. Still a little pricey at 18 times. You do get a dividend yielding 2.4%. And then I added a bank in here as one to watch. Bank OZK, formerly known as Bank of the Ozarks. Why should you be concerned about this one if you're interested in what's going on in the economy? Well, Bank OZK is one of the leading investors, lenders in the apartment space, and also to some extent the condominium space. So a lot of those new construction apartments that are going up in a lot of the major urban cities like Miami, Chicago, even New York City are getting their loans from Bank OZK. So this is one where if you want to know if anything untoward is going on with those loans, like maybe they can't lease out all those apartments, or they're getting a little bit of trouble having some of those developers paying back on the loans, this is one you want to tune in on. There's no indication of that, not yet, but again, this is one you want to tune in on to see what they're saying about what's happening out there in the real estate market. So it has a good track record, just these 2 misses over the last 4 quarters, but that's unusual for them. So we'll see if that trend continues. That's not what you want to see. But these shares trading near those lows again, but not quite as bad as the December sell-off, but cheap, trading at 8 times, and you do get a dividend with this one, 3.6% it's now yielding. So this is a good mix of companies that are reporting this week. We're getting a lot of other industrials and, as I mentioned, other railroads as well as airlines. So we're going to get a good indication of what these companies are seeing right now and what they think the future might hold. So it could be like D week, like a good week to kind of tune in and see what's happening with the U.S. economy, because it might be more than meets the eye. It might be better than what people are assuming. So definitely tune into these conference calls and check out all of our videos as we go along here on earnings season, because this is just the start. We're only in week 1 and this isn't even the busy week. So you don't want to miss all the videos we're going to have on FANG and the other tech names, as well as all the glamour stocks, the retailers, and other industrials that you know that I like. So we're going to be showing you the charts on all of these. Don't miss a single one. Get us at zacks.com/YouTube and check out our Twitter feed, or check out my StockTwits feed at Tracy Reineck. And as always, I'll be back again next week with a lot more charts.